Hello viewers, I am Sanjeev Pandya welcoming you to the Tax Talk right here on ITV Gold. Thank you so much for tuning into ITV Gold. This is a show which actually we started a couple of weeks ago and now everyone's talking about it, and thank you so very much for your feedback and suggestions. And of course, as we go along in the future, we'll have your questions will be answered in the show as well. Tax Talk, as the title explains, that this is the show where we're going to talk about taxes. Year 2021 is the year with so many changes in the tax rules and regulations and the laws that one should be aware of it. And to guide you and to advise you, Mr. A.J. Kumar of Science CPA Services is with us in the studio, and he's been in the business for over 20 years. When it comes to personal tax returns or corporate tax returns, Science CPA Services is a full-fledged accounting firm. They can definitely assist you out. Even if you want to start a new business, they'll guide you what kind of entity that you should set up based upon your personal tax returns. So, as you can see, a lot more to discuss in this Tax Talk show on ITV Gold. With that note, I'd like to welcome Mr. A.J. Kumar. Hello and welcome.
Absolutely, Sanjeev. Thank you.
How are you?
Absolutely great.
All right. Getting busy, huh?
Well, it's getting there. It's getting there. And as you mentioned, this season is very different than what we had seen earlier. With the child tax credit, with the EIDL, PPP, there are a lot of changes in the tax system that our viewers have to be careful about. With this show, we hope to provide enough information for you to keep you on the right side of the law, at the same time help you save money.
Absolutely, very good indeed. Let's just start from where we left off last week.
Absolutely.
And as you had said that next week in the next episode we're going to talk about 1099s and W-2s. So 1099 for consultants and W-2 for the employees. First, let's just give a basic information on 1099s and W-2s. What is the basic difference between the two? And then we'll continue our details on it.
Absolutely, Sanjay. That's a great start. So as we were discussing last week, so 1099 is mainly for the contractors, the subcontractor, which is not regularly working for you. An employee, on the other hand, gets W-2, and employees are supposed to be working for your company consistently at certain interval, with certain frequency, with certain expectation. So there are several criteria that the state and the IRS is looking at, that we can list some of it for you. Please understand, none of this criteria can be used single-handedly. You cannot really say, well, I qualify for this criteria, so I can get away with 1099. It's not an employee. So you look at the picture holistically. We'll list 10 criteria for you, and then you see out of these 10 criteria, does this situation looks more like an employee situation, or if it looks more like a contractor situation. Say, take an example, simplest example. Your plumbing is not working. You call the plumber, they come over here to fix the situation. You're not expecting this person to show up every month, every quarter. It's once a while when you need it. When you call the contractor does not have to come himself or herself. They can send anybody. When this person is coming to your home or your office, you don't have to train this person. They know what they're doing. You don't have to give them the equipment to do the job. So there are certain criteria that are listed that defines if the person who is doing the job for you, if that person can be classified as an employee or if the person is a subcontractor. Depending on which category you fall in, there are certain tax implications on GVG that we have to be worrying about.
Okay, so now that's the basic information on 1099 and W-2s. Now, my question to you is that does a company have to train 1099 employees?
Well, in some cases you do, in some cases you don't. But the training is more associated with your employees. When you hire an employee, you typically train them. When you call the plumber in our example, you're not expecting to be training the plumber how to fix whatever needs to be fixed. So training actually leans towards that this relationship is an employee-employer relationship as opposed to corp to corp, as opposed to business subcontractor relationship. A training is typically given out when you have an employee-employer relationship.
Okay. Now, when is the right time for a company to have an employee on 1099 or a W-2 employee?
Well, when you're expecting some work to be done regularly, frequently, at certain interval, and for that job, you're expecting this job to be done at your premise, under your supervision, by certain people, meaning I hire you. You have to show up. You can't really be sending your brother, your sister, or somebody else. An employee typically shows up to the job. They do the work themselves. So in those cases, when you're expecting the work to be done regularly, frequently by them, at your premise, with your training, under your supervision, that's when an employee needs to be hired as opposed to a subcontractor.
Okay, and then company, do they have to provide any office stationery equipment or anything to 1099 employee?
Well, again, as we were discussing earlier, Sanjeevji, not one criteria can be used to define that this relationship is more of a 1099 relationship or an employee relationship, but providing the equipment, the stationery, the laptop, or any tool typically indicates that this relation is more of an employee-employer relationship as opposed to a subcontractor. The subcontractor is supposed to be bringing their own tools. You don't typically provide the stationery, the tools, the laptop to the subcontractor. When you are expected to provide the stationery, laptop, the tools to do the job, that's when it sort of indicates it's an employee-employer relationship as opposed to a subcontractor relationship, Sanjeevji.
When a 1099, subcontractor or consultant rather, when they travel or when their expenses are related to the company, do they get reimbursed fully?
Well, the employees are expected to get reimbursed. So when you hire an employee, the coming to the job and going back to the job is typically included as part of their salary. But if you have this employee going to a client site, if you're expecting this employee to be buying something for the business, that's a reimbursable cost. For a 1099, for a subcontractor, whatever material they need, whatever travel time they need, is supposed to be built into their pricing. You're not expected to be providing reimbursement for the additional tool. I mean, in some cases, if you take an example, you call the plumber and they need to change the filter. They will charge you separately for the filter. That can be seen as a reimbursement. But again, you have to look at the whole situation holistically to see if this relationship sounds more of an employee-employer relationship or if the situation is more of a subcontractor relationship, Sanjeevji.
Okay, so there you go. We're discussing 1099 consultants versus W-2 employees, as we have gotten basic information from Mr. A.J. Kumar here about 1099 and W-2. We'll continue to get more information so that way viewers, that you're completely aware of it. And should you be in a situation in the future where you have to decide whether 1099 is good for you or W-2, let's see what happens. For a company, when they decide whether they want an employee on 1099 or W-2, they decide on their own. How does government look at that thing? I mean, does it really help government in any way, whether employees on 1099 or W-2s?
Well, yes. So the government wants everybody to be an employee. Because when you are an employee, you have certain taxes, they are referred as FICA taxes, Social Security and Medicare taxes, that the business has to pay 50% for the employee and 50% for the employer. So if you are hiring somebody for, let's say, $100, it's costing the company almost $110. 6.2% is the Social Security tax for the employee, 6.2% is for the employer, 1.45% is the Medicare tax for the employee, 1.45% is the Medicare tax for the employer. So 7.65% for the employee, same for the employer. So almost 15% of the gross payroll is collected by the government in terms of FICA taxes that funds the Social Security benefit. So government goes out of their way to justify, to define that this relationship is more of an employee-employer relationship as opposed to subcontractor relationship. But please understand, there are other tax consequences as well. Even for the recipient, even for the employee, even for the subcontractor, there are certain expenses you can claim as a subcontractor which you are not allowed to claim as an employee. So there are certain benefits and certain disadvantages, but from a government perspective, government wants to see everybody to be an employee as opposed to subcontractor.
Okay. Interesting. Next question that comes to my mind is that 1099 says for consultants. Is there a restriction or limits on the professions? What professions are not allowed to get 1099? They have to be either on W-2 or they have to be get paid by a third party.
Well, the system does not define the professions by 1099 versus W-2, but typically people where significant portion of your income is coming from one source, that indicates more of an employee-employer relationship. Say, for example, there are a lot of doctors, surgeons who will have relationship with several surgery center. On Monday they are working over here, on Tuesday they are working over here, so they have 5-6 contractual relationship. In that case, the government wants them to be classified as a subcontractor as opposed to an employee, as long as they have their own business. So if you have your own business, say I work with 5 surgery centers, I can form my own corporation, and my corporation can have a corp to corp or 1099 relationship with 5 surgery center. But if I'm going alone, working for the surgery center, the government would want me to be classified as an employee on the payroll of these 5 surgery center. Because when I have my own corporation, Sanjeevji, then Social Security and Medicare taxes are paid through my corporation. I have to be running my own payroll under my corporation. So government technically is not really losing the money. They are still getting the Social Security and the Medicare taxes. But if I'm doing it under my Social Security number, if I'm getting the 1099 under my name, that's not what the government wants. Then government will push back that AJ Kumar is expected to be here on Monday, every Monday for a few hours. He is using your equipment. He is working with your schedule. So he is coming to your premise to do the job. In that case, it's seen more of an employee-employer relationship as opposed to a subcontractual relationship.
If a company offers me a choice, whether do I want to be on 1099 or W-2, it could be rare, but if a company offers me a choice, in this case, let's say to an employee, what should they do?
Well, it's really not that rare, Sanjeevji. A lot of times company gives you an option. You can be an employee directly to my company, or you can form your corporation and become a corp to corp, a 1099 relationship, where the reason it's done typically from an employer perspective, from the person who is offering this option to you, the cost is lower for them. So as we were discussing in the first segment, if you have somebody on $100 of payroll, it's costing the employer $110. There are some employer taxes, some employer insurance that the company has to take on behalf of the employee. So we are talking about the Social Security and the Medicare taxes, which is 7.65%. So on an average, in general, the rule of thumb is costing the company 10% more than the actual payroll to run that payroll. So from a corp-to-corp relation perspective, company will typically offer, you can be on the W-2 for $50 an hour, or you can have a corp-to-corp relationship and will pay you $55. The rule of thumb is typically a lot of businesses will offer 10% more on a 1099 relationship.
Okay.
So we want to remind our viewers, Sanjeevji, we will try our best to cover as much information as possible, but it's a 30-minute show. We can only cover so much. If you have any question, please do not hesitate to email to us. But the rule of thumb is, on a corp-to-corp relationship, you should get at least 10% more than the employee's salary.
Okay, that's interesting. Good. Now, this was actually a question from one of our viewers, so that's why I wanted to bring it to. Now, that leads me to a question that can an employee, or can an individual rather, decide to be on W-2 for some part of the year and on 1099 for the other part of the year?
Well, you cannot decide yourself, but there are some situations when the business hires someone as a contractor, and then they really like their work, and then this person is hired as an employee. Say, for example, you show up to ITV Gold, you're doing 1 show, 2 shows, and then ITV Gold is very impressed with you. They say, Sanjeev, do you want to join us? And then you join them as an employee. So there are situations when the same person can get a 1099 and a W-2, but it's not common. It's not supposed to be every year. You're not supposed to be getting a 1099 and a W-2 every year from the same employer. But in the beginning, it's possible. So technically, legally, yes, it's possible that same person can get a 1099 and a W-2 in certain situation from the same employer.
Okay, good to know that. As we are just going down the list and going all the way to the bottom
Absolutely.
to find differences between 1099 consultants and W-2 employees, question comes to my mind, and this might be a very important question. When a person is on 1099, what happens to that person regarding their workers' compensation or disability insurance and stuff like that?
Well, if you think about it, when you are on 1099, then nobody is really paying for your workers' comp. If you are an employee, the employer is expected to pay the state, the SUI, State Unemployment Insurance Fund, State Disability Insurance Fund, Family Leave Insurance Fund. So there are certain taxes, SUI, SDI, FLI, the employer pays on behalf of the employees. So that if the employees ends up losing the job, the state will fund the unemployment. But when you are in 1099, then technically you are working for yourself. Who do you claim this unemployment from?
Yes,
in those cases, 1099 people were not supposed to be getting the unemployment. A lot of states, including New Jersey, New York, made certain exceptions during the COVID times, and a lot of these 1099 workers were allowed to get the unemployment benefit. But this is temporary due to COVID only. 1099 people were not getting the unemployment benefit, and they probably will not be getting the unemployment benefit in the future. So if unemployment benefit is one of the criteria for you, you need to consider being on the payroll, being an employee as opposed to a contractor.
Okay, interesting. Now, the other question comes to my mind is that this you cleared out the insurance matter, workers' comp and disability insurance. What kind of expenses a 1099 individual can deduct on their tax forms?
That's a great question. That's typically the first question we get in the market. What expenses can I claim on my tax return? How do you lower my tax liability? And I politely tell everybody, everybody's situation is different. What expenses you can claim are not necessarily that the other person can claim. So I get this example every day. I mean, my friend is able to claim these expenses. Well, your friend's situation may be slightly different than your situation. In some cases, even the grocery that you're buying is a deductible expense. And you say, how? Well, if you own a restaurant, buying the grocery is a deductible expense for you. But if you don't have a business reason for that expense, then it's not a deductible expense. The easy way to look at any expense that you have, you say, if I did not have this business, would I still have this expense? If your answer is yes, then it's not a deductible expense. Say, for example, you would have eaten anyway. You have the business or you don't have the business. So your own meal is not a deductible expense even if you have the business, because you would have eaten anyway. Your home is not a deductible expense. You would be living anyway. Dressing up your clothes, unless it's uniform, unless you are in medical field or unless you are in a field where you have to have certain uniform that's needed only for that type of work, typically your clothing is not a deductible expense. So 1099 is considered as self-employed. All the expenses that you have related to your job, including buying the laptop, stationery, website, travel, advertising, marketing, all these expenses, client entertainment, could be claimed as a business expense. A lot of 1099 people who are getting this 1099 under their social security number, they have this 1099 claimed on Schedule C.
Okay, yes.
A lot of employees where you are getting the W-2, you're not allowed to claim these expenses. There were certain expenses that the employees were allowed to claim up until 2017, and then the rule changed. Now the employees are not expected, are not supposed to be claiming any travel, meals, client entertainment, office supply, stationery, marketing, advertising. All these expenses are not allowed on a W-2. We get this question every day. Oh, I travel 40 miles one way for my job. Can I claim the travel expenses? Can I claim the gas expenses? No, you can't. When you sign up for the job, whatever salary you're getting, you're expected to show up at that location. If the company is sending you somewhere else, the company is expected to provide you the reimbursement for that that work. If the company is not providing you the reimbursement, the company is expecting that this is part of your job, this is part of your salary, and you are not allowed to claim any travel expenses when you are on W-2.
Okay, very interesting, very well said. Now coming to the last and very important question.
Absolutely,
but
please.
before that, I just want to remind viewers that Science CPA Services, they can be reached at 908-380-6876 is their phone number. Full-fledged accounting firm, bookkeeping related matters. Even if you are in the middle of a tax audit, they can certainly help you out with that one also. So do give them a call. Visit their website, which is sciencecpaservices.com. Ajay, here's my last question.
Absolutely, please.
Of today in this for this episode. 1099 for consultants, W-2 for the employees. Who gets most audited by IRS?
Absolutely. So you're right. More expense deduction that you can make, more potentially audit probability you have. So on 1099, there are a lot of expenses that are allowed. On W-2, the expenses are not allowed. So the audit probability for a W-2 employee is very less. See, when the employer is giving the W-2 or any salary to you, they are putting a salary slip to the IRS. They are sending this information to the state. So whatever money you are getting, the state knows it, the IRS knows it. So the room to play on your tax return for a salaried employee is not there. So typically, salaried employees do not get audited unless you make a mistake on your tax return. A lot of audits happens on Schedule C. Schedule C, self-employed, when you have the 1099 coming to your name, is the most audited schedule in the IRS. So when you are working for yourself, people tend to get greedy. People tend to claim certain expenses that probably they should not be claiming. That's why IRS has a separate team focusing on self-employment people. So when you have your own business, you have to be careful what expense you claim, what expense you don't claim. But before we stop talking about audit, I want you to understand audit is not a big deal. A lot of people get scared, very, very apprehensive. They can't sleep because they got a letter from IRS. Find a competent accountant, find a good accountant. We do these audits every day. It's not a problem. A lot of audits do not result into any liability. Just because you have an IRS letter does not mean you have to pay something. A lot of these IRS letters now are computer generated because the information you submitted is not matching with their record. So if you can justify your situation, more than likely you do not have to pay anything. So if you have an IRS letter, don't be scared, don't be apprehensive, find a good accountant and have it taken care of. Just don't ignore it, please.
There you go. You perhaps made many individuals out there feel a little relaxed if they are in the middle of audit. And like I said that, for even a tax audit related question, you can contact Mr. Ajay Kumar at Science CPA Services and they can certainly help you out. Now, 1099, as the name suggests, there are 1099 reasons to be on 1099 or not to be on 1099. But in this show, not all of them, but close to 99 reasons Ajay ji has explained.
Absolutely, it's our pleasure. But
and W-2's got only 2 reasons, to be on it or not to be on it. That's absolutely it. You don't have to even go any further to think about that. But thank you so very much going into the depth and explaining the differences between 1099 consultants and
it's
W-2
my pleasure.
employees.
Absolutely,
Yes.
it's my pleasure. So we remind all our viewers, there is only so much we can cover in this show. It's a limited time show. If you have any question, please do not hesitate to email to us.
Absolutely. So do email it to us. Do contact Science CPA Services for any of your tax related question. I am Sanjeev Pandya and thanking Ajay ji for your input. We'll be back next week, same place, same time. Until we meet again, you all have a good, happy, tax-free days ahead.